Hey everyone, welcome back to Corporate Decoder, the place where we dig into the documents that big companies hope you'll never read. Today we are looking at the story of a fund that got flipped, bought, and merged more times than I have had hot dinners. It's the annual shareholder report for the Putnam VT Global Asset Allocation Fund, and it is full of surprises. So what is the story? This fund invests in a mix of stocks and bonds all over the world, aiming for long-term returns while trying to avoid losing too much money. But the interesting part is everything that happened behind the scenes, especially who is actually running the show. This report covers January 1, 2024 to December 31, 2024. It also includes some key financials and some serious organizational changes, so let's get right into it. First, the important numbers. How much did it cost investors to have their money in this fund? We're looking at Class IA shares, and for every $10,000 invested, it cost $92. That's 0.85% of the investment. This covers the fund's operating expenses. There's also a Class IB that costs investors $119 per $10,000 investment, which is 1.10%. Remember, these costs do not include any expenses charged by the insurance product that holds the fund. Now for performance. Class IA shares had a return of 16.63% for the year. That sounds pretty good, but the report also mentions benchmarks to compare against. It is important to see how the fund performed relative to the Russell 3000 index and the Putnam Balanced Blended Benchmark, which had returns of 23.81% and 12.80% respectively. The fund lagged the Russell 3000 index but beat the Putnam Balanced Blended Benchmark. This blended benchmark is comprised of 50% Russell 3000 index, 35% Bloomberg US Aggregate Index, 10% MSCI EAFE Index, and 5% JP Morgan Developed High Yield Index. Looking at what helped the fund's performance, security selections within the Quantitative US Large Cap Equity Strategy, Quantitative International Enhanced Equity, and the Fundamental Global Asset Allocation Equity Strategy were major contributors. On the flip side, security selection in the Quantitative US Small Cap Equity Strategy hurt performance, and derivatives also detracted from performance. Let's take a longer view. If you invested $10,000 in Class IA shares back in 2014, it would be worth $20,178 at the end of 2024. For Class IB shares, the same $10,000 investment would be worth $19,675. Looking at average annual returns, Class IA shares over the past 10 years averaged 7.27%, while Class IB shares averaged 7.00% over the same period. Once again, the Putnam Balanced Blended Benchmark comes in at 7.69%, while the Russell 3000 Index comes in at 12.55% over the same 10-year period. As of the end of the year, the fund has total net assets of $102,799,336. Total management fees paid for Class IA and Class IB is $558,954. The portfolio turnover rate was pretty high at 234%. This means the fund is actively buying and selling its holdings. What was the fund invested in? Mostly U.S. stocks at 46.1% of its assets, followed by international stocks at 32.7%. U.S. bonds come in at 9.7%, and international bonds come in at 6.7%. Now let's dive into those organizational changes, because this is where the story gets really interesting. In May of 2023, Franklin Resources, which is Franklin Templeton, announced they were buying Putnam Investments. The deal closed in January 2024, and as part of that deal, Putnam Investment Management, the fund's advisor, and its sub-advisors PIL and PAC became subsidiaries of Franklin Templeton. Shareholders had to approve this change, which they did. New contracts were put in place that were identical to the old ones, except for some date changes. But that wasn't the end of it. Effective July 15, 2024, Putnam Management then transferred its management contract for the fund to Franklin Advisors. Basically, Franklin Advisors took over as the investment advisor, and the fund's portfolio managers became employees of Franklin Advisors. Putnam Management was then retained as a sub-advisor. And there is more. Effective November 1, 2024, PIL, one of the sub-advisors, merged with and into another Franklin Templeton subsidiary, Franklin Templeton Investment Management Limited, or FTIML. So the PIL investment pros became FTIML employees, and Franklin Advisors signed a new sub-advisory agreement with FTIML. So to summarize, this fund had the following happen to it in just 1 year. It got bought by Franklin Templeton, its management was transferred from Putnam Management to Franklin Advisors. Then Putnam Management was brought in as a sub-advisor, and finally one of its other sub-advisors, PIL, merged with another Franklin Templeton entity, FTIML. And people say finance is boring. That's a summary of the changes. You can find more info in the fund's prospectus. Moving on to the other parts of the report, the filing talks about the fund's code of ethics. They didn't adopt a separate code for its top executives. It uses the code of ethics of Putnam Investment Management and Franklin Templeton. The code was amended at the start of 2024, then further amendments were made in March as employees transitioned to Franklin Templeton policies. The fund's Audit, Compliance, and Risk Committee is comprised of independent trustees, and they have determined that Mr. McGreevy and Mr. Singh qualify as Audit Committee financial experts. Let's look at the fees paid to the fund's auditor. Audit fees were roughly $120,000 each year, and tax fees came in around $10,000. But the big number here is that the fund's independent auditor billed aggregate non-audit fees in the amounts of $873,852 and $370,768 in the last 2 years to the fund's investment manager, and related entities. The rest of the SEC filing includes the full financial statements and details all of its holdings. So what does all of this mean? What's the corporate decoder take? On the one hand, the fund is a bit of a mess right now, having been bought and flipped and merged in record time. It makes you wonder if the fund's interests are really first and foremost on the manager's mind. On the other hand, Franklin Templeton is a huge asset manager, so this fund now has the backing of a larger, more resourced organization. It also is possible, with all the changes, that its underperformance was caused by these organizational shifts and not necessarily the specific investment selections. Hopefully for investors, the organizational changes have stabilized, and now that the dust has settled, the investment strategy can improve. While the fund's returns beat its blended benchmark, they significantly lagged the overall market represented by the Russell 3000. The high portfolio turnover rate is something to keep an eye on. High turnover can lead to higher transaction costs and potentially impact returns. Also, the high non-audit fees paid to the auditor raises questions about potential conflicts of interest and oversight. Overall, this fund is a mixed bag right now. It has potential, but investors need to be aware of the fund's recent performance and the organizational changes before investing. It really depends on whether Franklin Templeton can bring in performance in the coming years. Thanks for watching. If you found this helpful, please like and subscribe for more corporate deep dives.